A lot of the things that make ASICs great are on the flip side, like a double-edged blade, and it can cut you up. These simple things might not be obvious to new miners, even to GPU miners that might be looking towards ASICs because they're seeking daily profit. So here's a few things that you really need to realize when calculating an investment into ASIC mining. So ASIC mining, I've got some insight on it. Now they're good and bad for small miners. Home miners looking at ASIC see daily profits of $7, $10, $15 a day. That's $200 to $450 a month in profit. Sounds amazing. Simple, reliable, easy daily profits. That is the level playing field for everybody. So what is the strategy that sets the winners apart from the losers? For corporations, it's mining in mass. So imagine a wall 30 foot high, hundreds of feet long, of simple, easy, reliable miners. Multi-million, multi-$100 million mines. The most profitable ASIC right now is the Bitmain K7. If you're lucky enough to have 12-cent electric rate, you're making about $13.80 a day in profits right now. The mega farms are making $19 a day. You're making around $400 a month, and they're making like $600 a month. The reason for that is all due to electricity costs. Everybody's getting the same amount of coins per miner, but their electricity being cheaper is all the difference. So the same amount of coin yield sounds good, right? That is until the network hash rises and then difficulty goes up. The reason it matters is because whatever network you're mining on only pays out so many coins per day. The more miners online mining for that, competing for those coins, the less each miner gets. So you're already making 28% less profits per day because of your electric rate. And now you're making less coins too because the network's going up. The mega farms are also getting less coins, but because of their electric rate being so lower, in terms of percentages, their profits are going down less than you. The more that network hash goes up, the wider the profitability gap between you and the big dogs. Crypto is a zero-sum game. You might have heard that before. It means that when one person wins, another person fails. It's give and take. With ASICs, you're competing against the biggest, baddest miners in the game. No matter how good a price you got that ASIC for, or no matter how low your residential electric rate is, you're going to be starting behind the competition. You'll be starting behind them and the gap will just keep wide. They're going to ROI on their equipment, sell the used gear, and then upgrade to new, more efficient equipment all before you could even ROI on your own machine. Now, is it possible to be successful in ASIC mining? Absolutely. And if you're here now in this 2023 bear market, this is really one of the best chances you have to make it. But it's important to have a solid exit strategy. You should never plan to keep your ASIC long enough to pay it off. You should be prepared to sell it and even boot that thing out the door in case of an emergency. If a new miner came out that was going to make your miner obsolete, the outcome wouldn't be good if you held on to that thing. When I had to sell my Bitcoin and Litecoin miners, I tried to kind of hold on to 10 KD Box Pros that I had. But when Bitmain announced the K3 and I saw the specs on that thing, I quick sold the heck out of those things. Luckily for my situation, I got a really good deal from Hong Kong. I only lost about $100 to $150 on them. But had I not followed my gut, those things are just about paperweights now, and they might never be profitable again. The sad news about that is I put right in the description, KA3's coming out. I don't know if people just don't listen, they don't care, they don't realize what's going on, but that is the zero-sum game. Another man's sell is another man's buy. And strategy is the reason why this channel exists. I don't want people to get hurt, especially when they're trying to build a brighter future for themselves. But we have got to realize this is a dog-eat-dog environment. Crypto, stocks, real estate, commodities. One man's win is another man's crush. That is the investing game. And if we have to take a step back and look at something in an unconventional way, that's what we're going to do. That's what we have to do. We've got to maintain an edge over the competition. So are ASICs bad? Not really. This video is actually not about ASICs being bad. It's about knowing the game we're participating in, being aware of it, and being aware of our competition's skills. The more you know about things, the better you can decide how you're going to play the game if you choose to play the game. Be good, be safe, and keep passion.